Let's be honest, the words year-end financial checklist don't exactly make anyone jump out of bed excited. But here's what I've learned after working with dozens of founder-led companies. The founders who know their year-end checklist inside and out, they walk into January calm, confident, and in control because this process isn't about paperwork, it's about clarity. Hi, I'm Pam Meissner, COO and CFO at Cathcap. So in this video, I want to take you through a simple, transparent walkthrough of a sample year-end financial checklist. We'll go section by section: reconciliation, cash and receivables, tax prep, compliance, and forward planning, so you can see exactly how to use it as a leadership tool, not just an admin task. You can follow along, pause where you need to, or even use this as a framework to build your own internal version. Let's jump in. Okay, let's start with the first section of the checklist: account reconciliation. In this part of the checklist, we're looking at the cash that's on its way in, the invoices that haven't cleared yet, the payments still sitting in transit, and anything you expect to hit the account before year end. Each line has a simple column: reconciled, variance, and notes. Now, here's what this actually means in practice. Reconciled just means your system matches your statement. If your accounting software says you have $82,000 in that account, your actual bank statement should say the same thing. If it doesn't, that's a variance. And that variance column isn't just there for bookkeeping. It's your red flag column. It's where you capture anything that needs a deeper look before you close the books. One founder we worked with found a recurring software charge they'd forgotten about, $800 a month, just by running this review. Tiny leak, big impact over time. So if you're following along with your own numbers, pause here and make sure every account is reconciled through the end of the month. You've investigated any variances. You're not relying on assumptions, just facts, because reconciliation is what turns financial noise into financial truth. Next section, cash flow and receivables. This part of the checklist is all about what's still coming in: invoices that haven't cleared, payments in transit, and any receipts you're expecting before the year ends. This section is about one simple question: what cash is still sitting out there, waiting to come home? We see this every year. Founders go into December with thousands, sometimes hundreds of thousands, in unpaid invoices. On paper, that looks fine. In reality, it means you're funding next month's operations with last quarter's sales. So here's the move. Go line by line through this section and flag any customer who still owes payment. Then ask 3 quick questions. Has the invoice been sent? Has it been received? Has it been scheduled for payment? If you can't confidently answer all 3, that's a follow-up. And don't underestimate the power of a quick human check-in. We've seen founders collect tens of thousands in a week just by sending personal, "Hey, want to make sure this landed okay?" messages. Finally, look at the expected receipts line. If you're waiting on large payments, this is where you sanity check timing. Do you need that cash to clear this year for taxes or cash flow? If so, act early. Year-end isn't the time to be passive about collections. It's the time to make sure what you earned actually arrives. Now, flip to the next section: expenses and payables. This is the other side of the cash equation. If receivables are what's coming in, payables are what's going out. In this part of the checklist, we're looking at what's going out: vendor payments coming due, any credit card balances that need clearing, and those recurring expenses or subscriptions that quietly add up. This is where you catch the "did we actually pay that?" moments. It's also where you can make strategic decisions about timing. For example, are there legitimate business expenses you can complete before year end to optimize taxes? Or do you need to hold certain payments until January to manage cash? This is one of those areas where finance meets strategy. It's not just about cutting checks, it's about deciding when and why you do it. We once worked with a founder who shifted a few key vendor payments by just 1 week, not to delay, but to match cash inflow with outflow. And it took all the pressure out of year end. Small moves, big calm. Next section, tax prep and compliance. This part of the checklist should feel more like prevention than panic. This part of the checklist is about staying ahead of tax season. You'll see reminders to review your estimated tax payments, make sure every 1099 and W-9 is collected, and book that pre-year-end check-in with your accountant. Here's what's key. You don't want to start thinking about taxes when your CPA is already in full filing mode. By running through this checklist now, you can still make moves that change your outcome, legally and strategically. For example, if you're projecting higher profits than expected, there may be smart expenses or investments you can make this year that align with your goals. If you're short on documentation, like W-9s or expense receipts, this is the moment to fix it, not 3 months from now. And yes, talk to your accountant before the holidays. That one conversation can save you hours and dollars later. Because tax prep done early doesn't just save time, it builds confidence. And finally, forward planning. This section is often overlooked, but it's where the real leadership happens. This last part of the checklist shifts you into forward mode, setting cash goals for the first quarter, rolling in your actual year-end numbers, and stress testing your budget assumptions for what's next. Think of this as the bridge between one year and the next. When your books are clean, your cash is collected, and your tax position is clear, you're in the perfect spot to make better forward-looking decisions. Ask yourself, what story did this year's numbers tell? Did we hit our targets? Where did things surprise us, for better or worse? We've seen founders use this section as a mini debrief, sitting down with their leadership team to translate the numbers into lessons. Maybe revenue was solid, but cash was tight. That tells you pricing or payment terms might need adjusting. Maybe margins were thinner than expected. That points to a cost structure review. Or maybe everything worked, and now it's about doubling down. Whatever your case, this last section is about turning clarity into momentum, not just closing the books, resetting the business.
So that's the walkthrough. 5 simple sections: reconciliation, receivables, payables, tax, and planning. But together, they give you full transparency into the financial heartbeat of your business. And here's the truth. Most founders don't need more complexity. They just need visibility. When you can open a checklist like this and see, line by line, that everything's accounted for, something shifts. Your team feels it. You stop reacting. You start leading. Because transparency isn't about knowing every number by heart. It's about trusting that nothing is hiding under the surface. So here's what I'd encourage. Pull up your version of this checklist. Walk through it this week, not to rush through the year, but to finish it with clarity and confidence. And maybe ask yourself this one question as you close. If someone new stepped into your business tomorrow, could they see, at a glance, how financially healthy it really is? That's what this checklist gives you. A mirror, not a mystery. So take the time, run through it, and walk into the new year knowing exactly where you stand. Thanks for watching.